times at the moment in England and Ireland. In Ireland in particular, we've had some pretty big announcements. One by Nestle, Wyeth, closing down one of the infant formula plants, where they say they're going to close it down by 2029. Lakeland's going to shut down 3 plants. What's going to happen there? Some more consolidation. Saputo are closing down a plant in the UK. So that sounds a bit negative, but what we're seeing is actually a stronger price for next year. So from March to October, we're seeing the markets trading in around 41 to 43 cents per litre. For the sterling farmers, we're looking at about 38 to about 41 pence per litre. So much stronger markets next year than this year, than the back half of this year. This year was probably skewed quite a lot at the start of the year because a lot of processors, particularly in Ireland, were way overpaying for their milk. So some places were paying 57 cents a litre for January, February milk when the market was only down at 40, 42 cents per litre. So Chinese milk production up 4 to 5 billion litres a year at the moment, so which is huge. What effect are they going to have on the market? Well, we're already starting to see New Zealand milk being diverted into Africa. And when the CEO, Miles Hurrell, was in London last May, he mentioned that they were going to try and pull out of African markets and focus on more value added. But what we're seeing in reality is they're really going to have to look at diverting milk in there. So what does that mean for Irish farmers? Well, Irish farmers, if your processor is making whole milk powder, fat-filled milk powder, you're competing directly in market with that New Zealand milk. So from a price perspective, it's going to affect you quite a lot. Also, we have the free trade agreement with the UK and New Zealand coming into effect. So we're going to see more cheese coming from New Zealand into the UK, because at the moment, the cost of production in New Zealand is a lot less than it is in England and Ireland at the moment.